I feel that there's a lot of missed opportunity, and we have so much potential in terms of resources, in terms of human capital. If only we had the right set of policies, we could have been a global leader across so many different facets, so many different domains. And I hope that one day we are able to get there with the help of policymakers like you, who are technocrats in their fields, who are so well versed and well learned that we do not really need foreign intervention.
The capacity of Pakistan to create their own revival program is kind of compromised. And we are always looking towards international financial institutions to come and handhold us. And that's a big dilemma.
The gender biases, the gender norms that prevent women from accessing or pursuing finance, banking formally. What has anything been done on the legislative side or by the financial sector as such to incentivize and tap this particular market segment?
There seemed to be a realization at the general public level that they need to do something about it. And this is a very important element for the overall social and economic progress of Pakistan. So State Bank of Pakistan a couple of years ago came out with the policy called Banking on Equality, where they gave actual specific targets year by year for the next 5 years for banks to pursue in terms of bringing women into not just the normal banking account, but also lending and hiring them and taking it even further of supporting them for entrepreneurship.
I think for a country the size of that is the size of Pakistan, I mean, we're the fifth most populous country in the world, we cannot forcefully implement our policies and expect the population to adhere to it. And given we are very multicultural, if to say so.
One of the reasons is that we're unfortunately a broken society. And for example, Rana Saab doesn't want to talk to a Sayyid, and Sayyid doesn't want to talk to a Chima, and Chima doesn't want to talk to a Mirza. This is a big problem. I usually quote this as an example of how broken we are as a society, and that needs to be fixed in before we talk about, any sort of financial inclusion, women participation, the credit, for example, culture in Pakistan.
Hello everyone, my name is Nauraiz Rana and I'm an economist with the World Bank. I'll be hosting today's program on New Wave, where we will be talking about a micro level issue that Pakistan continues to face. For those of you who have followed our programs would be well aware that we tend to cover micro level topics such as Pakistan's negotiation with the IMF, Pakistan's recurring issue with external debt, our balance of payment crisis, inflation, the currencies issues. But today we would like to talk about Pakistan's financial inclusion landscape, the issues with Pakistan's financial sector development, where does it stand, and what are the opportunities? And joining me today for this discussion is a very special guest. I would like to introduce Mr. Zafar Masud, who's the president of the Bank of Punjab, also known as BOP. He's a financial industry leader and expert, and also happens to be an aircraft survivor. And he's writing and publishing a book on that topic as well, and brings with him a world of knowledge, both about how to navigate through life and also to navigate through the financial landscape of Pakistan. So I'm very delighted to have you here, Mr. Masud.
Thank you very much, Nauraiz. I am a keen follower of your podcast. The particular thing that I like about your podcast is the varied kind of topics that you cover. Although you are an economist yourself, there has to be a podcast done with you specifically. Somebody like myself, learning from you, especially on the private sector, which is your forte. But from cricket to climate change to political economy, I mean, it's really fascinating. And my felicitations to you for doing a great job on this podcast. Looking forward to our discussion today.
No, thank you so much for your kind words. Honestly, it means a lot coming from you. And we do try to cover a broad spectrum of topics and issues, particularly related to Pakistan and elsewhere in the world as well. And everything just flows in, and we have a team of very capable experts who are well versed in politics or well versed in international affairs, and thus we have the liberty to kind of expand our horizon and cover these issues. But thank you so much again for your kind words.
So Nauraiz, one thing that you do very well, by the way, you pick up those topics which are generally not being talked about in Pakistan. So, for example, climate change, when you did the program, although it's more will become a buzzword, but people are not talking about the nitty-gritties and the details of that. Political economy program that you did was also very different and very bold, by the way. Um, but the cricket economy one is probably the one of its kind program I've really come across. He's our ex-colleague, by the way, from Citibank. And
Oh,
you did a brilliant job in terms of, in terms of highlighting this as another opportunity. Yes, all these things are those things which are conventionally not being talked about. So in my case, you've put me on a spot in a sense that, the topic that you've given to me is a pretty mundane topic. It's been talked about a lot, but I'll try and do justice, with the flavor of your podcast today.
no, 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 not at all. I think we can make it very, very interesting, and I'm sure you will make it very interesting. But I know, I agree. I mean, the cricket one was again one of my favorites because I think whenever I look at Pakistan, read about Pakistan, I am in Pakistan, I feel that there's a lot of missed opportunity, and we have so much potential in terms of resources, in terms of human capital. If only we had the right set of policies, we could have been a global leader across so many different facets, so many different domains. And I hope
Yeah.
that one day we are able to get there with the help of policymakers like you who are technocrats in their fields, who are so well versed and well learned that we do not really need foreign intervention to help us navigate through the
You have
turmoil that we
hit
are currently
the head of
suffering.
the nail, Nauraiz, before even we started with the formal this thing. You've actually, touched upon something which is the key, and that is the fact that we, um, the capacity of Pakistan to create their own um, program, a revival program, has kind of compromised, and we are always looking towards, international financial institutions to come and handhold us. Uh, and that's a big dilemma. There is an extent to which they can understand the intricacies. They can bring in more value from a global perspective, what's going on elsewhere, and that could be replicated in Pakistan. But to be honest with you, I mean, the people in Pakistan, should understand their problems better than anybody else. And rather than just relying on them to give the prescription for our problems, we should be able to have an indigenous plan prepared ourselves, and that is something which is lacking. Right at the beginning, you've actually hit the head of the nail.
Absolutely. And I think this is what, ironically, this is what we development practitioners are told as well, even at the international level, at working international organizations, that while various countries around the world, they face similar issues, but
Yes,
their interventions and the outcome is dependent on being aware of the dissimilarities, the nuances that
exactly.
exist between them. So as long as you do not engage with the local population, engage with local experts, engage with the local issues that govern that particular region, a reform that was implemented in Africa would very unlikely work in South Asia, for instance.
Absolutely. And I don't know, Nauraiz, if you've come across my recent article only last week, that was published in Business Recorder. Um, that is, I have come out with the concept called Charter of Society. And what you just talked about is actually fits in there well. Although it's a political, sociological framework within which this falls, there's a concept called Overton window. I don't know if you're familiar with that, but it's more of a political economy type, sociology type topic. But it fits in so well with us that until unless you have the buy-in from people on the reforms you need to undertake, you will not be able to move an inch successfully with whatever prescription you are following. Uh, I mean,
100%, yes.
so there's a talk about, for example, charter of economy. There's a talk about charter of democracy. Even a discussion about charter of business. None of them can move, and they have not moved because the charter of society has been lacking. And you don't really require a formal, you know,
An agreement, yeah.
agreement to sign on it. It comes from people and the pressure from the people to do the right thing. And trust me, then the decision makers will also take that decision easily, irrespective of how difficult those decisions are. Um, because that buy-in is there right at the bottom
Absolutely.
in the people.
Very well
And
put,
that is what
yes.
makes the difference.
And people are
Uh,
the biggest stakeholders, simple as that. So if you do
so,
not
look,
have,
all our
yeah,
economic policies, Nauraiz, all of them, the only one objective in the world is the benefit of the people. So any policy, every policy that you're taking has to have the right impact on the people. And this is where the social contract piece comes
mm,
into to play
yeah,
as well. Which charter society, as I mentioned to
mm,
you, in the larger scheme of things, the other word that is used for it, which is a much broader term, is the social contract,
social contract.
or a narrower term perhaps. But in the overall scheme of things, until unless you have that charter of society going through the, and it's a two-way thing. It will all, so initially it has to come from people. And I'm a keen reader of history as well, especially the economic history. You can see, my collection. Daniel Yergin is one of my favorite authors. Uh, Wherever the changes have taken place, it has come through the pressure from the public.
Mm,
The leaders are also come through the public. So the
yeah,
change in public is the starting point, not the leader per se. Although I'm
mm,
not in any way, you know, uh, taking away the importance of the leader and his ability to steer people in the right
mm,
direction. But fact of the matter is, it's the people as a
mm,
society, the
mm,
intellectuals in the society, the elites in the society have to have that kind of awareness
yeah,
of what right things are, and that needs to be taken.
ab-
Then it is coming from in economics also, there's a
yeah, yeah,
debate going on, especially in US right now,
yeah.
whether it's trickle down approach or it's a bottom up
Yeah,
approach.
bottom approach, yes, yeah,
So this
yeah,
is what
exactly.
it boils down to.
Especially, I think for a country the size of that is the size of Pakistan. I mean, we're the fifth most populous country in the world. We cannot forcefully implement our policies and expect the population to adhere to it. And given we are very multicultural, if to say so, the amount of ethnicities that we have that coexist within Pakistan's geographical boundaries,
Yes.
it's very diverse,
And at
and it's
different
in terms
levels.
at a
So
different levels, yes.
from religious to to the ethnic, as you said, rightly said.
Yeah.
And even now, in fact, Nauraiz, this is our biggest dilemma as well. So what we're going to talk about in your introduction that you just said, one of the reasons is that we are unfortunately a broken society. And for example, Rana Saab doesn't want to talk to a Sayyid, and Sayyid doesn't want to talk to a Chima, and
Mm,
Chima doesn't want to talk to a Mirza. This is a big problem. And, I usually quote this as an example of how broken we are as a society. And that needs to be fixed in before we talk about,
mm,
any sort of financial inclusion, women participation,
mm,
the credit, for example, culture in Pakistan, uh, that we need to bring this society together. It has to work, learn to work together as well. So, for example, in the case of agriculture, if you look at, and I'm purposely drawing the analogy from India because they are much more heterogeneous than us
yeah.
in all those respects, language and
Absolutely. Yeah.
religion
Yeah.
and everything. China is not that heterogeneous, but nevertheless, it's a big country, so they have their own
Yeah.
set of complexities. Both of them have done miracles in agriculture because the cooperative farming has done very well. They have been able to work with each other if in the larger economic interest of the
Yeah.
community. Unfortunately, in our case, the cooperative farming is just not taking off because we are such a broken society that even within our families, we don't want to work with the other person.
Mm,
And the result is that, by default, the the land reforms have taken place. Now, 89% of our land is 12.5 acres and below. So in a way that, and until unless you have cooperative farming, which means that you will have the
yeah.
charter of society on let's say agriculture, you will not be able um, to bring in that productivity,
Productivity.
that efficiency into the system, and which is very concerning to my mind, and that then is endemic across all the industries and sectors that we look at in Pakistan. That's the starting point as far as I'm concerned.
Absolutely. No, no, I 100% agree. I don't think there's any other contrary opinion to what you just mentioned. You've highlighted the crux of the issue. And that's the one of the beautiful things about economy is that you cannot look at economy in isolation. It
Yes.
works in tandem with the social aspects of the society, of the community. It looks at the political factors, and everything comes together to really either bolster or, impede a country's way of functioning economically. And on that note, I think the financial inclusion topic is not very different. We have been, unlike other sectors you just mentioned, we've been unable or we've been failed to bring within our umbrella of financial inclusion the majority of the country's population. According to some recent figures, 2021, 79% of Pakistan's population is still unbanked. Up to about 56% does not engage in any products, either formally or informally. 4% only save with formal institutions, and even lesser have a line of credit. These numbers can be a bit dated. I think they're 2021, according to the World Bank's Index database, but nothing much has changed over the last 2 or 3 years. So we are still pretty much there. So here, for those who are not very well versed with this sector and this topic, I would like you to elaborate what this means, what implications it has for the economy, such abysmal state of affairs in terms of financial inclusion. And secondly, what are some of the supply side factors and what are some of the demand side factors that impede financial inclusion in Pakistan?
So, the financial inclusion is a very broad topic, and I'll try and box it in different compartments so that we'll be able to look at what are the impediments in particular segment or compartment, and how can that be then addressed, whether it's supply side or demand side or whatever. And financial inclusion, as you rightly said about the economy in general, it's in Pakistan, it's a social issue. There are political issues. And then, of course, there are economic issues as well, which also includes the infrastructure issues. And that has direct correlation, of course, with the growth and investment. So the growth obviously cannot take place without investment, and particularly domestic investment. Unfortunately, in our case, we have been struggling as far as the investments has been concerned. And there are multiple reasons for it, starting from low saving rates to other reasons like ease of doing business. You are very well familiar with that. The economic freedom that is out there in Pakistan. So there are multiple reasons of why there is in low investments related to financial inclusion. And that financial inclusion piece, just to put things in perspective, according to State Bank of Pakistan's recent data, 10% of increase in financial inclusion results in 1.3% of the GDP growth. Now, that's a very significant number.
Is, yeah.
And just to put things in context in Pakistan, 21% of the adults in Pakistan has banking accounts. So you can well imagine that what kind of missed opportunities out there in terms of financial inclusion, which leads into investment and then subsequently into the economic growth. So starting with the social piece, when you have 50% of your population as women, and they are not part of the formal economic process system, then obviously you have a major piece of financial inclusion out of the way.
Yeah.
Not a very healthy situation. It's because of multiple reasons. It's because of the education level in women. It's because of their work participation. It's also, by the way, because of the gender gap, pay gap. So for example, when I talk about the education levels, generally in Pakistan, that's a problem. That also leads into the financial inclusion piece. But with women, particularly, it's the number is even more dismal. In the region, when I look at it, which includes, by the way, Afghanistan as well. Um, the women education level of 47% in Pakistan versus 66% for the region. And if I were to compare it with India and Bangladesh, we're talking about 93% in India
Mm.
and 96% in Bangladesh. So that says it all, that 50% of the population, which is, you know, very much marginally educated, their participation into the financial system is lacking. The second piece is that, the women participation in the workforce is 23%, according to World Bank. And 38%, 23% and 38% is the global average.
Yeah.
So again, there Pakistan is lagging behind too. And then, of course, the third most important thing is that, the gender pay gap in Pakistan is 34%, which is double of what it's supposed to
Global,
be in the rest
yeah,
global
yeah.
average. But it doesn't stop here. In fact, 90% of the women, their salaries are below 1% of the total salary strata. So there is not incentive enough for them to be in the formal sector either. So multiple issues there, social side, and of course the social side is also the fact that we do not encourage our women to go out and work as well.
Uh,
It is very much a Pakistan-centric thing. It's not a religious aspect at all. Because if you look at Malaysia, for example, almost 100% of the women work. I think it's 90% plus. Turkey, similar situation. But in Pakistan, I think it's more to do with the cultural element of it. Maybe the influence coming from Afghanistan or elsewhere. Then it's the religious element. Nevertheless,
okay.
whatever it is.
Yeah, sorry. I was going to
No,
bring this
no,
up
please.
later, but I'm going to just pivot slightly this conversation a little bit, and then we'll come back to this. So, because you've mentioned the gender biases, the gender norms that prevent women from accessing or pursuing financial inclusion policies, or banking formally, what has anything been done on the legislative side or by the
Yes.
financial sector as such to
Yeah.
incentivize and tap this particular market
Yeah.
segment?
Yeah.
And has that helped? Have you seen the numbers go up? Because that's a reality. It'll take us
Yes.
some time to address those gender gaps which are there in education, in norms, in workplace, in accessing employment, and just safety and security as well. So it'll take
Right.
a time for us to get there. And but in the meantime, how in the short term, to put it that way, what it is being done or what can be done to address this?
No, thanks for posing that question. So the good news is, Nauraiz, and as we were talking about earlier in our discussion as well, there is seem to be a realization at the general public level that they need to do something about it. And this is a very important element for the overall social and economic progress of Pakistan. So State Bank of Pakistan a couple of years ago came out with the policy called Banking on Equality, where they gave actual specific targets year by year for the next 5 years for banks to pursue in terms of bringing women into not just the normal banking account, but also lending and hiring them and taking it even further of supporting them for entrepreneurship. So interestingly enough, those numbers, obviously they've devised those numbers in this consultation with the banking industry. Initially, these numbers were very slow, but the idea is in the next 5 years, where we stand today, we should be able to double these numbers, at least in the banking sector, which is a big this thing. It will be a leapfrog because the banks will be able to force the other customers. And I think the second level of the policy making would be to force their customers by the banks that they have to now start showing the women number in their workforce and their overall scheme of things, so that they can get the credit from us, like the State Bank of Pakistan has done in the case of green banking. So the
Mm.
framework for green banking has come through, whereby now we will be approving the credit for our customers based on they complying with those green guidelines. So I guess on the gender side too, the next step would be that we'll get there, but the first step has already been done. But Nauraiz, trust me, at the end of the day, it has to come from public. Interestingly enough, it has some very positive impact on organizations. For example, organization like ours, which was or the other organization that I am a chairman of is Oil and Gas Development Company, OGDCL. Uh, the acceptance of women in the workforce has always been an issue. But what we've seen over a period of time, that when we start forcing them to deal with women in the work environment has changed substantially. The efficiencies have increased, and of course the overall participation of the women has become better as well, because the work environment has been very negative in the past, which has now become much more conducive for the women. And for example, now we are very clear that on two things there is a zero compromise: one on harassment, and two on frauds. So no compromise there. I have seen a shift in our organization in the last 3 years, really towards the better in terms of overall environment and the work. I would say performance. Yeah, performance. Up to on a lighter note, in fact, the problem is gone on the other side. The male are now coming and arguing and complaining that, look, women you are giving more preference to. And we have to do it because we need to put in that incentive plan for women to come and work. So gender pay gap, I would say that in the next 2 years, it will be other way around in the banking industry, at least in my organization, because in order to attract women, you have to offer them that flexibility. You have to offer them better salaries. And then you have to give them specific jobs too, so that they can come and participate. So it's an interesting situation. But I guess the policy level and the realization in the society in general is there to accept this. So that is a social piece. And then on social piece also, by the way, Nauraiz, the special person, that has also increased. And we are making a conscious effort to include them into the system. The government is also, looking at it very positively. They've given various incentives, awards and all. That has impacted. So what is going on is that the tolerance, and the single biggest problem of our society is the tolerance piece. So that tolerance for different kind of people with different backgrounds, with different cultures, is now meshing in it as well. Although at a micro level in my organization, for example, I can visibly see it. But it is in the overall scheme of things, I think that is getting a momentum too.
I think it's that debate, not that debate, actually, that topic of equality versus equity, where equality would be ensuring that everyone has access to the same set of policies, but equity is more apt, which highlights the fact that people from different backgrounds, people from different genders face different challenges. And you need to be aware of those challenges and tailor those policies such that it addresses to their weaknesses. And I think that is what we need to ensure that, financial inclusion does not encompass only men and women, but also encompasses the divide between rural and urban, people from different parts of Pakistan, people from different educational backgrounds. And there are products out there that appeals to each of them differently. Person has income access, who's making 6 figures, is appealed to different set of products compared to someone who's a daily wage worker, for instance.
That's right. Yeah. So that social piece is now emerging. It's going in the right direction. And then, the economic piece per se is also right now something which is a problem and is lagging behind as far as promoting the financial inclusion is concerned. And the economic piece, the biggest one is the shadow economy, the informality of the economy. Right now, almost 30% of the deposit size is the currency in circulation. And that currency in circulation is a parallel economy which is going through. And those are not part of the formal financial inclusion per se. And the result is that then the saving rates are very low. We have one of
Absolutely.
the lowest saving rates in the region again. We have 6% saving rate, whereas India has 30% and Bangladesh
Yeah.
has 26%.
Yeah.
And
Yeah.
Sri Lanka is 28% as well, by the way.
Yes. Yeah.
And that also says a lot in terms of availability of the capital. It's a completely different debate that, there obviously are income levels are low too. The savings are low as well. There are cultural and our consumption is very high. Our consumption rate is what
Yeah.
is 92.8% in the last 10 years average. In the GNP, the consumption piece, which is government
Yeah.
spending as well as household consumption,
Yeah.
is 92.3%. So just, almost 7% is left behind for investment and uh, uh,
That.
for
Yeah.
for the investment and eventual growth
Yeah.
and net export, by the way, which is again related
Yeah.
to the.
Yeah.
So unless you have the export-driven investment coming in, your problems ain't going to resolve. And that is, on the second piece, on the economic side, the thing that is lagging behind is the lower saving rates, informality of the economy,
Hmm.
and then also, the infrastructure is not supporting either. So both physical infrastructure as well as soft infrastructure. And physical infrastructure, um, Pakistan is a large country, large land mass, uh, and we have um, 10 branches per 100,000 people, as opposed to, for example, Bangladesh, which has 9 branches per 100,000 people, and their land mass is 5 times smaller than ours. Uh, India, on the other hand, has 15 branches per 100,000 people. And that also is something which is lagging behind as far as bringing people into the financial inclusion is concerned. Then the transaction amount has become very expensive. And in case of us, for example, in comparison to UPI in India, uh, the Nadra is a profit center rather than a utility. And they
Hmm.
charge, from 10 rupees to 45 rupees per transaction. And the result is that overall maintenance of the account has become so expensive that just not makes sense to have zero balance accounts for the people in general, and that also is affecting the financial inclusion piece.
Hmm.
Um,
Zafar,
yeah,
sorry, I wanted to ask you one thing actually. So
yeah,
you brought up the topic of informality, and it really piques my interest all the time. I've written some papers on informality as well myself, and in Pakistan, according to certain estimates, more than almost 75% of economic activity operates under the shadow, is basically part of the informal sector, informal economy.
yeah,
20 only 27% of the workforce is can be labeled as the formal workforce who have a central agreement, who form within the bracket of formality,
yes,
who are taxed and so on and so forth. And informality has huge, like high levels of informality has very bad or aggressive repercussions for the economy. Because the government is not able to tax enough, generate enough revenue. It robs them of what their fiscal capacity could have been. Secondly, it also hampers the productivity of formal firms. According to certain research papers, on average, the productivity of a formal firm is impeded by 25% because a similar operational firm operates in the informal sector. So that is two. And thirdly, in terms of financial inclusion, obviously there's a lot of activities is cash based in Pakistan, due to the virtue of it being informal. They try to hide their earnings. They try to uh, kind of play with their books, etc. What has the financial sector done, or what can it do to incentivize those people, those firms operating under the shadow to formalize, or at least save their earnings in with formal institutions? Are there
yeah.
have this been thought of, or have any interventions been done to specifically target that segment?
Yeah. So you see, the issue is that we have to figure out what are the real reasons behind this large currency in circulation or the shadow economy that you just referred to. And the primary reason, to my mind, are the taxation system. And the taxation system, the piece of the banking industry comes much later. But if you have certain structural gaps in there, then those gaps have to be plugged in before we can actually talk about what the financial sector can do to then do their job better. So, for example, in case of Pakistan, and I'm going to quote you a number and statistics that probably will be surprising for you. I've recently done an article on currency in circulation, by the way. I don't know if you came across that one. Myself
I
and
read that.
Salim Raza Saab and Sultan Lana Saab. That article, when we were doing it, the statistics came in front of me, and it was actually quite alarming. So, 3 sectors which contribute more than 50% in our GDP, which is real estate, and I know you've talked about a lot of that one, on agriculture, and the third one is retail. They all put together cumulatively are over 50% of our GDP. And their contribution in the deposits is how much, Nauraiz? It's merely 15%, the 3 of them put together. And this is where, it hurts.
Oh, wow.
So that's why I said it is fascinating statistics. I just came across this recently, and I thought today when we talk about it, I'm going to quote this one. And this is a very important number. So when you have such large portion of the GDP out of the tax net, then the informality has to come into the economy, and that results into lower financial inclusion, that results into lower investment, and of course the lower.
Yeah.
And that also, by the way, you've rightly pointed out, puts the burden of taxation on those people who are part of the system. So remaining 50% is actually taking the brunt of the remaining 50% which is not there. And this is something which is very concerning. And that has to be plugged in first. These are not difficult things to tackle. For example, on agriculture side, the taxation is already there, and it's pretty judicious actually. But we have given it to the wrong agency to collect the tax. If you just assign the right people, either the provincial revenue authority or the federal revenue authority to collect it, then I think there is a major contribution that comes through there. I'm going to quote another number to you, which is again something that will surprise you. And then, on the real estate side, you have multiple level of issues there, from income. By the way, I'm not a big supporter of income tax. I believe that there has to be turnover tax like UK. And so turnover tax on real estate income that is coming in, and then revenue coming in, and then you have the the transfer fee involved in there. You need to review that as well. But then the pricing on which the transactions have to take place, those are completely distorted too. Those are determined by the government, by the district administration in each district. And the result is that those numbers are so low that overall tax, even if you collect on the transfer fee, that's not adequate enough to justify for that sector the kind of income that is out there. And that leads into that larger informality, because major saving portion of Pakistan's household goes into the real estate. So typically, if you ask any of your colleagues in Pakistan or a family, most of them have their savings in the real estate. But that's not part and parcel of the overall scheme of things. Retail, on the other hand, is not taxed at all. And retail alone, by the way, contributes around 21% of the GDP. And retail also have other implications. For example, in retail, the most of your foreign currency demands comes from the retail side. So the large grocery stores in Lahore, Karachi, and elsewhere, the imported goods which are there, they're not imported. through the banks. They generally come through through informal means, and that is in fact black means, and that results into this sector being completely out of the thing, and results into a negative contribution to the economy, because that the single biggest contributor to inflation is the foreign exchange piece, which will always remain under pressure, because there is a pressure coming in from the sector which is totally out of the text net or documentation right now. On the sales side also, the majority of them are cash sales. So we need to put some kind of check in there. Now, these three sectors alone, Nauraiz, our estimate is that on a very conservative side, we can collect somewhere close to 3 trillion rupees. And just to put things in context for your audience, the total tax collection this year in Pakistan will be 9.4 trillion. So almost more than 35, one third of that could come from these three sectors, which are not part of the system as we speak. PBA has done some assessment, and they've come out with 1.8 billion number without agriculture. But I would say that our assessment says it has to be 3 trillion rupees.
So, okay, for my personal knowledge as well, I have a lot that I can learn from you. So whenever we are working on informality, whenever I'm working on for informality, we make a set of we create a policy package, and it's a very diverse set where we talk about easing the process of registration. We talk about strengthening enforcement. We talk about setting up one-stop shops, digitizing so it's easier, more conducive for firms to set up and to, alleviate the challenges that they face. Another thing that constitutes part of that policy package is giving or according those micro firms, small or medium firms, access to finance. That falls within incentivization. So if they have more incentive, if they have access to credit, then they're more likely to formalize or register themselves rather than operate informally. But then it was a chicken and egg situation. It's more risky as well. If a firm granting access to a firm, an informal firm, there's this likelihood that they might not return the credit, that they might default. So is that a good solution, granting access to finance to those particular firms? Has that been done? Has that been tried and tested in Pakistan?
Yes, that is a good solution, and that has been tried and tested also. By the way, the ease of doing business piece, or as you mentioned, is an incentive for people, is not adequate enough to attract people from informal sector, unless you have carrot and stick approach on the taxation piece on these three big credit. All things will come subsequently, subsequent to that one. So you really need the stick and the carrot. Carrot there too. For example, you need to incentivize people that look, if you in retail sector, just to quote one example, if you were to make the payment through the POS machine, then the general sales tax will be lower in comparison to cash, for example. And then you have to have the stick too to make sure that has been enforced as well. So having said that, those things actually follow once that piece is taken care of. And again, on the ease of doing business too, we are not something to write home about. 108th in, I think, 180 countries that World Bank assessed. And then, I was looking at this Freedom Foundation's work on, freedom of economic freedom, index on economic freedom for the businesses. And they've constituted 4 broader constituencies, and then sub-constituency 3 in each, so 12 of them. And they scale country on a scale of 1 to 100. Pakistan has been rated as 49.2. And in terms of total number of countries, again, 180. Pakistan is 152nd. So the reason why I'm quoting these numbers to you, that, what kind of incentive would be required to bring them into the system will be very difficult unless everything move in tandem or in the right direction. So specifically answering your question about the microfinance and SME. So one of the tragedy that Pakistan has faced, Nauraiz, is the fact that, we have over a period of time has kind of completely diminished these specialized institutions. And now Pakistan has become more of a universal banking type structure. And the result is that those specific businesses, whether it's microfinance or SME or agriculture, we have not been able to contribute much to these sectors. And the critical mass of the financial inclusion that you earlier talked about, or the informality of the economy, or the overall credit uptake which is not taking place, is in these particular sectors. And that has banks are not equipped to undertake that business, and those specialized institutions have disappeared. Blended risk financing is recently been. I am the one who introduced that company to Pakistan. By the way, it's called Infrazam in Pakistan, which is done with the Private Infrastructure Development Group of UK. That is the one step in the right direction. But all of that has to lead towards financial inclusion in a big way, and bringing that formality into the system, but slowly and gradually, until unless you plug in those other weaknesses. I would like to also share with you that, in the previous government, the government had launched a program called Kamyab Pakistan program. I don't know if you're familiar with that. I happen to be the I'm happen to be the convener of that program. So I devised that program from scratch to launching that program. And that was entirely focused towards getting the funding. So repository of funding are the commercial banks, and the lenders are the microfinance institutions. So you give the funding to the microfinance institutions, you have government as an intermediary in the middle, and then microfinance institutions will then go out and give the credit to the most deserving sectors in the society, which was low-cost housing, agriculture, and SME. Well, not SME, but S. So that program, in which the government actually gave first loss risk to the banks, and they also gave the subsidy on the funding side, because high interest rate does not allow people to do the service properly, or the credit offtake for that matter. And therefore, it was important to make sure that those subsidies are available. Unfortunately, because of the fiscal constraints that we are facing, for example, this year alone, our funding requirement from the banking industry, is around 5.5 trillion rupees. So there is a gap between the revenue and the expenses, to that extent that you hardly can divert funding for these kind of sectors to support initiatives which are important to bring them into the formal system. The other thing is also, Nauraiz, that it's not as simple that you will just give them credit incentive and they'll come into the system. It is their dealing subsequently with the others as well. So the counterparty, if they are not part of the formal economy, then you will have another problem at hand, because you don't have the clout enough to ask them to be part and parcel of the whole thing. And there will always be a distortion as far as your numbers are concerned and your dealings are concerned. And then it will be somewhere a hybrid of the two. And you end up falling for informal side more than the formal side. So it's an overall complication that needs to be addressed.
No, absolutely. I think you've rightly pointed this out, and it's never one piece in isolation. You have to address these various figures, and more than just the financial sector, I think the policies and the interventions by the government need to holistically look at these different various gaps that you highlighted. And speaking of government now, actually, one of the biggest supply side issues that we read about when we talk about Pakistan's problems with financial sector landscape is the amount of credit that is extended to the public sector, which it crowds out investment or finance that is available for the private sector, and B, whenever the sovereign is under stress, then it poses an additional credit risk. And our government or our governments in the past are not very popular for allocating resources appropriately. We have a lot of market failing subsidies. We have SOEs, which tend to bleed the economy every now and then. There's these prominent examples of PIA, of the steel mills, and there are other smaller examples
Discourse.
as well. Exactly, the discourse, the circular debt. The Pakistan's internal debt, the public debt, tends to accumulate year on year. Uh, and how, and the point that I'm trying to make is, and laying the ground is, that when 70% of that finance is credited to the public sector, which tends to be inefficient, how can we address our structural issues? How can we move towards an economy which is more productive, that invests in sectors, which strengthens private sector development, or which provides the private sector that tool, and that tool being the finance, to create goods which can be exported, which in turn can address our balance of payment crisis, which in turn can help the country move out of this economic turmoil that we're in. How is the financial sector dealing with the government? How can it deal with the public sector?
Yeah. So Nauraiz, you have asked a question which has at least two very large facets. So I'm going to divide it into parts. One is the fiscal piece, which is my favorite topic, by the way. I have a long article in two parts on, it's all in fiscal account in Pakistan now. To what is the banking, the credit availability, particularly to the private sector. So let me start out with first scaring you with the number that out of the deposit to investment to deposit ratio in Pakistan is 85%. Although you are right about saying 30%, because that 30% is the private, which has come down now is 23% to the private sector. But the reason why it's 85, because over and above the deposits of 26 trillion, we have another 8.3 trillion of 8.4 trillion of open market operations as well, which is, in other words, just to explain things to your audience, it's like a quantitative easing. But that money, rather than going towards the private sector for spurring growth, is actually being recycled by the government and is borrowed back by the government. So that liquidity which comes into the system goes back to the government. So it's now 85%. And this number doesn't stop here, by the way. If I were to dissect it further, out of that, 15%, almost 6 to 7% goes to the public sector companies.
Exactly. 6.7% was, sorry, I just want to quote that number. Like, according to the last enterprise survey, 6.7% of the firms said that they have a line of credit with a bank or a financial institution. Then that is
you've actually got to the end of where I was getting to. So it's around, yes, 6.7%. 6 to 7% is that number. And in the middle, that 8% number is actually go towards public sector entities and to the concessional financing, which is export refinance, which is Kamyab Pakistan, which is Prime Minister Youth Business Loan, which are other concessional financing. And those concessional financing, by the way, every time you increase the interest rate, they have a negative impact on your fiscal account. And these are essentially not market-driven credit. So I'll take them out of the equation as well. So 6.7% that you quoted, out of that 6.7%, 3% is consumer, as opposed to US 70%, because that 3% includes the mortgages as well, and which is almost 1.5% of the GDP. US is 70% of the GDP. So you can well imagine the kind of squeezing in which has taken place in the private sector credit as far as the banking sector is concerned. Basically, why is this happening? Because we have a dominant borrower which is AAA rated and willing to give us, a very good return on our deposits, and that emanates from the fiscal account problems that we are facing. As I told you, 5.5 trillion. And then there are multiple reasons why that is happening. I'm going to come to that later. You have touched the chord to a very sensitive topic as far as I'm concerned. initially you did that on the Charter of Society and now on the fiscal side. So I'm going to come to that, and we talk about if you allow me, we'll talk about the major components out there, the 3 or 4 big ones. And then I would like to take the opportunity to suggest the solutions that I think could
Please, yes.
be beneficial to tackling those problems. But to talk about, the credit per se, so you have dominant borrower, squeezes private sector, but private sector also, as I told you, the informality in the sector also does not allow the credit offtake demand to be there, or the banks which essentially deals in documentation, they are hampered to approve the credit properly for them. The cash in circulation, as we talked about, is 1/3 of the total deposit size. So that is also something which is not only squeezing the pocket of funding, but also, a large portion is cash driven. Banks can't do much about there. As far as higher interest rate is a big problem as well. And right now, it's not feasible to borrow money at 25%. No business can sustain at 25%. And this is a circular issue, because interest rates are obviously they follow the inflation rate, and the inflation is high because we have large imported piece in there, administrative prices, plus the informality of the economy leads into the demand for dollars in the open market, which drags down our entire interbank market as far as the rates are concerned, resulting into expensive imports and thus more inflation. So that is, interest rate is a big problem as well, because at this point in time, there are very few takers out there. I already talked about the specialized institutions, that are lacking. If they're there, the situation would be very different. And, Nauraiz, you know this better than anybody else, that how critical a role mortgages play in terms of overall lending space. And in Pakistan, that is almost zero, is non-existent. And that leads primarily because of higher interest rates and all. Then overall, poverty levels and lack of savings in the system. But one thing I would like to highlight here, Nauraiz, is, I think I would not shy away in taking the blame for ourselves as bankers too. I think the training of the bankers have kind of become stale, because we are getting such an easy money coming our way that we also not have an incentive to be more creative about, as you were earlier asking me, creative about attracting the people on the banking side. Deposit perhaps, yes, but on the lending side, one would still, shy away from treading into an area which is marginal credit. When you have such a attractive return coming through from a AAA rating institutions, why would you be bothered about it? Now, coming back to the first point, which is the most critical one, and the result is, by the way, is that, we are still, the bankers in Pakistan are still very collateral driven financing mode than the cash flow driven. And unless we move away from that mindset from collateral driven to cash flow driven, lending, we will not be able to make an impact as far as the credit
I
offtake.
was just reading up, like on average, the value of collateral is 153% of the value of the loan that needs to be extended. So, I mean, there you go. So it is very collateral.
So just on that 153%, if you look at the quality of those collateral as well, some of them are very liquid collateral too. So really, essentially you are doing one-to-one. You're taking the cash, one form or the other, or near cash on one side, and you're giving. So that, if you take that into account also, I think that number will go even further up if you take that out. And this is not just feasible. It cannot go on like this. Right now, there is the credit demand is anemic because of interest rates and all that I've talked about. But at some point in time, I think the banks have to be geared up to do this. But in order to achieve that, I just now want to come back to my earlier point of the dominant borrower. and how can that dominant borrower can create more space for the private sector through the banking system. Right now, by the way, 95% of the funding requirement of the government comes from the banking industry. In the past, there used to be State Bank of Pakistan that they could borrow directly, but that window has been closed. And the contribution of the direct investment into the government securities and through the national savings is merely 5%. So 95% of the funding requirement of the government comes through the sector, through the banking sector. And that poses another complication in the overall scheme of things, that banks cannot say no to them, because the entire system will become shaky if the banks pull themselves back. So on one hand, it is attractive for the banks. On the other hand, it's more like an economic need also for the banks to keep on funding this, so that the overall stability in the system remains. And if we look at that piece of, as I told you, 5.5 trillion requirement, the result is that one, we have to look at the two equations of the fiscal side, which is the revenue piece. We talked about 3 trillion rupee there, so I'm not going to repeat that one. But that, if we take care of that one, we will be able to, it will become a decent size of the tax collection piece. But then, if you look at the provinces, and overall, I would say overall devolution of the political system and the financial system in Pakistan, and particularly in the context of tax collection and utilization of that, has to go down all the way to the district level like China. So the tax collection there, and then usage there, that brings in more transparency, accountability, and better collection too. India, provinces contribute around 35% in the overall tax collection, tax revenue of India. In Pakistan, that is 10% only. So it brings a lot of burden on the federal government to collect taxes, although after the devolution, 18th Amendment, most of the industries have been devolved to the provinces, but the tax collection contribution is not there. So these are two pieces. If we look at on the revenue side, I think we have a pretty decent chance of addressing the problem of this dominant borrower, and then we will have more credit available for them.
Absolutely, yes.
But
it's simple math. It's simple math. The more revenue they'll be able to generate by themselves, the lesser the burden will be. Yeah.
And then if you go towards, towards the expenditure side, I'm going to pick up 3 or 4 big items there, and then try and explain of what's going on there. So single biggest item, for example, is debt servicing. And debt servicing, because of the high interest rates, that is becoming a moving target. So inflation up, interest rates up, and the debt servicing piece up. We've already talked about that. How can it bring down the currencies under control? If the government borrowings have come down, the interest rate, the inflation will come down, and the government borrowing will come down there too. But then we have to change certain narrative too. For example, in case of monetary policy, we have been advocating to follow the headline inflation. And I'm always been a big supporter of following the core inflation, like the rest of the world. For example, in USA, this is PSE, which has been targeted, not the headline inflation. In Pakistan, it's headline inflation that we are targeting. And if I if I plot the headline inflation number and the core inflation number in Pakistan, the delta has been 2.65%. And that 2.65% based on the debt stock today would mean another 1 trillion rupee. And this happened over a period of time. I'm quoting you a 10-year this thing. So you can well imagine that easily we have given in debt servicing, we've added another 1 trillion into the complication, or more debt servicing required, more debt created than otherwise. And that has to be taken care of as far as this interest rate is concerned. I think that is also addressable. The good news is that with the recent administrative actions that the government has taken, so hoarding, smuggling, and currency, the currency has improved. And the result is that, let me just quote you some interesting statistics here too. So the currency in circulation has been 9.3 trillion rupee in June, as of June 30th. That number has come down to 8.4 trillion, 9.2 to 8.3 trillion. To be precise, 779 billion rupee worth of currency in circulation has been reduced. And why did this happen? We're trying to figure out what actually went wrong. I think there is a scare of some kind of raid on those people. There are two kinds of categories: filers, who are keeping this money because they were trying to save the tax on the transaction that was imposed in the banking sector. So they brought in back there because they didn't want to carry cash. If there is a crackdown on their where they're keeping the cash, then that could create more complications from them. And in order to avoid that situation, they have brought that money back into the system. For non-filers, because they're already non-filers, they have also bring that money back into the system. They still remain non-filers. They'll pay a higher tax on it, and it will be fine, really. So that complication, to avoid, a large portion, almost 50% of the portion, has come back into the banking deposits. But remaining 50%, and this fits in well with our earlier discussion too, has gone into national savings and directly into the government securities, PIBs and T-bills, because there is no tax there as far as those individuals are concerned. And so this money has gone there, and the result is that money in circulation has come down. And just hold on, the open market operation has also come down from 9.3 trillion to 8.4 trillion. So just imagine, as you asked earlier, and I said I'm gonna connect the dots there. It actually has reduced the requirement of that dominant borrower just on this crackdown. And just imagine if we were to take certain actions on the taxation front. We've earlier talked about what positive impact would that have on availability of credit for the private sector. And then subsidy, my favorite topic, is subsidies have to go. My take is that there should be zero subsidies, the current system that we are facing, except for two sectors: poor and vulnerable, using the national socio-economic scorecard. And the other one is for the export sector to be encouraged. I'm not specifically talking about giving more subsidy to textile sector, but I'm talking about giving that subsidy for better seed and fertilizer and pesticides and machinery to agriculture sector. I'm giving that subsidy to IT, where we need to create this venture capital to promote these freelancers and IT sector people.
That's excellent point. Yes.
To come into the force. And then I'm not just stopping here. I'm also putting a condition that make this into an accountable proposition. So it has to be performance driven. It has to be time bound. So we will be able to evaluate the benefit of it, evaluate the economic impact of that subsidy, and then determine whether we need to continue with this or some tweaking is required. But fertilizer subsidy has to go, commodity subsidy has to go, and even the subsidy on the gas and electricity has to go too. Because there is so much leakage in that subsidy that we extend, although these are units, lower units, 300 and below, but because of the leakages which are in there through that system, that we're better off using that scorecard that we developed with the help of World Bank, giving that direct subsidy to these people, than going through the system and offering that.
Yeah, no, absolutely. And to be honest, some of these subsidies that we offer on petroleum and oil products, they're basically, in a way, they're subsidizing those who tend to utilize them more. So the poor are subsidizing the rich in that particular case. And secondly, it tends to drain our foreign reserves, because anything that we import and we're subsidizing that, we're basically, kind of draining our foreign reserves in that particular scenario as well by subsidizing it when we don't have the liberty to do that.
Absolutely.
And none of these, There's some excellent points. And then speaking, you brightly mentioned the IT sector. I mean, we use this word leapfrogging development. And because we've already missed so many stages in development, we can't do that one by one. And one way to leapfrog that is by really investing in IT sector and making sure that we are able to capitalize on this digitalization that is happening on the technological front globally, worldwide. Again, a commodity, a product that we can export is export worthy compared to other sectors that we subsidize, and they only tend to bleed us out. So I,
Absolutely, absolutely. And another sector, for example, is light engineering. So for example, this car manufacturing is a big business in Pakistan. The deletion there has been lagging behind big time. I think the deletion right now is 28, 29%, if I'm correct. And this industry has been there for more than 2 decades, perhaps. And they have never met their target of deletion. So please make people an offer, incentivize them to go for, subsidize them for the light engineering sector as well. And it's a big SME sector. So you have, so divert those subsidies directly to them rather than coming through the likes of, just about the import, subsidizing the import, going through the fertilizer companies or the commodity companies, whether it's flour mills or sugar mills or otherwise, you have to go and give that incentive, the subsidy directly to them. Two more things, Nauraiz, I would like to delve into when we talk about the expense side of the fiscal equation. Pension fund. The pension fund is 1.5 trillion of our overall provinces and federal government put together. There is a solution to this. Pakistan is a cash hungry country, but it is an asset rich country. And the result is that we can offer those government assets, primarily real estate assets. And those real estate assets are the ones, if you look at pension funds across the globe, they started out primarily with the real estate development because of the very nature. And then, it helps them in developing the capital market for a longer term tenor instruments too. And that will eventually help the government to raise funding other than the banking sector from this thing also. So there are multiple benefits of it. So under private-public partnership, set up a fund, government should contribute their assets into that fund and let the private sector put in the money and then develop those assets. This ain't going to happen overnight, but in medium to long term, we will have the solution in place in terms of funding. It will become fully funded pension fund every year. And then last but not the least, and it's a very critical one, is public sector development program. And in provinces, we call it annual development program. These are essentially the government projects, which are very important infrastructure projects. I'm just not trying to take the, credit away from what impact, the economic impact they have. But I also like to put things in context as far as these are concerned. Right now, the government, without doubt, that amount is around 2 to 2.5 trillion. This is about time that we will start doing these projects under PPP mode. So using the viability gap fund, using, and there is another element to it too, but viability gap fund, promoting the private sector to come into these projects, and then your funding requirement can actually go down to 300 to 400 billion rupees merely from currently 2 to 5 trillion rupees. And no country can develop without private sector participation. We need to bring private sector into the mainframe, into the mainstream for these kind of projects which are out there. Government cannot do it. Neither they have the capacity nor the funding. And now the world has changed so much, Nauraiz, that the technical requirements also, they're not, and nowhere in the government, by the way, they do not, develop themselves though so quickly as the private sector does. And that efficiency has to be brought in through this private-public partnership arrangement.
Yeah, no, absolutely. Personally, to be honest, I'm a huge proponent of PPPs. I feel that there is no need for the government to invest so much of its own funds in setting up, whether those are infrastructural development programs or even social programs, when there's a social and a financial benefit associated with it, and you are giving the private sector the stakes that are involved and giving them the liberty to come and work with them in combination and to spur the financial investment part of it and mobilize both the funds and the actual operations as well. So the government, all it needs to do is what we call it is creating that enabling environment.
Yes,
That in terms of giving them the freedom and also setting up those private public partnerships. So
absolutely.
yeah, yeah. No, thank
So
you. I
on the
mean, so
same on the
Gigi,
same
please, please.
topic, Nauraiz, you talked about the public sector entities, SOEs as we call them. Um, these the good news there is that out of the top 10 loss-making entities, seven are discos,
Yeah.
and one is PIA, and the third one, and then it's NHA, and the last one is NHA, and then it's PIA, steel mill, and these seven.
Mm.
The good news is that government is very serious about privatizing PIA.
Privatizing them. Yeah.
Let's get over this. There is an acceptance. The good point
Yeah.
is, Nauraiz, that there is an acceptance in the people. So last time when people talked about the privatization of PIA, you remember what kind of protest was out there on the streets?
Yeah.
Nothing this time around. And we are in a fairly advanced stage. I think in the next week or so, the RFP will be out for obtaining the expression of interest from the interested advisors
High,
to begin.
high time, high time. I think it was all political rhetoric that was spurred by one or the other who was not in power.
Exactly.
Whenever that
Let me
rhetoric
give
would
you another
sell it.
good news too, by the way. Another good news is that, and interestingly, World Bank Group has helped in making the framework for it, is the privatization of discos too. And the discos privatization, which is taking place, is, at least I am very happy about it, is the fact that they are not selling the assets per se, but they're setting the concessions. So promoting more competition within one disco, for example. In Lahore, they're going to sell the concessions. So you will move away from creating from a public sector monopoly to a private sector monopoly by selling the concessions. And that framework has also been approved apparently by the cabinet. Thanks to IFC for helping the government out on this one. And then steel mill is also up for grabs. That is very much under discussion that they need to be privatized. Another good news is that 7 critical assets have been parked under the Sovereign Wealth Fund. And these are primarily E&P companies, OGDCL and PPLs of the world, MARI. They have been parked in there. The idea is that, you take them out of the normal bureaucracy of the governments. Law enforcement agencies' role has been reduced there. Well, actually eliminated there. And, there will be a better governance in place because the partners that will come in that sovereign wealth fund, hopefully, UAE and Saudi and Qatar, then that will bring in some kind of value and better corporate governance to the overall scheme of things. So SOE, when you talked about, I think, this is also good news that these things have happened. And I'm hopeful that this will have a better impact on our fiscal account, which is really the core of our
problems. Absolutely. Honestly, double thank you now, actually, A, for that comprehensive overview and sharing so much insights that I was completely unaware of. And secondly, for ending this on a good note, highlighting that the things that are in the pipeline, the privatization of PIA and the discussion over steel mills. I think it is high time that it is done. It was very imperative. And I hope that it sees its way through to the end. And
So one more
yeah.
thing, and Nauraiz, I know this is close to your heart, so that's why I want to bring in right now, is the climate funding. Unfortunately, we have not been able, and we are an ideal candidate to tap into that climate funding in Pakistan, given that our
we're one of the
greenhouse gas
vulnerable.
emission
Oh
is
yeah.
less than 1%.
Yes.
Last year, by the way, World Bank assessed our damage of more than $30 billion.
$30 billion,
Uh,
yes.
and we have not been able to put our act together as far as the climate compliant funding is concerned. And there's large funding out there that we can tap into. And this is again something which is good news for us to focus on and bring in that funding so that our pressure on the fiscal account reduces.
Yeah,
And
absolutely.
create the necessary, leeway in our banking system to start lending to the private sector.
Absolutely. And then it also kind of helps with green finances. Then it spurs an entire chain of where
Absolutely.
that investment goes into. Yes. And that's what other countries are doing as well elsewhere in the world. They're diversifying the economy. They're trying to incentivize sectors which facilitate decarbonization. They look at mitigation, adaptation practices. And if Pakistan is able to embark upon that trajectory, I think that is wonderful news.
Absolutely.
Yeah. Nini, thank you so much for your time. It was honestly, yes, one of the favorite discussions that I've had so far, and
No,
it was an
pleasure is all mine.
absolute pleasure. Thank you so much.
So, Nauraiz, before
Yeah.
before we conclude and you leave,
Mhm.
I'm enjoying my discussion so much with you that I'm just taking the advantage of your program and your presence, and want to share with you that I've written a book on my, and you right at the beginning you talked about the my my
Absolutely, your
interest.
the incident exactly. Oh, I'm sorry. I wanted to come to that in the end, and not lighten up the mood, but something very different. And I think it's I'm not I don't know anyone, not directly, not indirectly, who've gone through that experience, and have getting to know that from you, and I guess would be super motivating and inspiring. So please do share what your lessons are and what you
So
happen to pen in your
very
book.
quickly, Nauraiz, I have written a book called, it's a functional name. It's gone to the international publisher. Let's see when it comes out. It's called Leased Breath. And I believe that I'm living in a world which is a borrowed heaven. So you are too young to be following that a music group called the Coors. I don't know if you've come across them. It's an Irish brand. Yeah,
Mhm.
but it's Raza Rumi and myself, vintage group. They have a song called Borrowed Heaven. So do check that out.
I
And
will.
this
Now
is,
I
and I
definitely
can
will.
resonate, a lot with that, the lyrics in that song, because when I went through the whole thing, I realized how important it is. So we all are living in this borrowed heaven. And in this borrowed heaven, there are certain learnings that I particularly gained, having the kiss of death and seeing death very closely. And those are 10 learnings, and I have written, one chapter on each of those 10 learnings. Um, and that book will also be very helpful for our younger people for changing. Look, my only objective, Nauraiz, is that this charter of society, the society overall has to be a good society. Everything else will fall in place.
Mm,
Our problem is not economic. Our
mm,
problem is social. And if we can tackle that problem, I think we'll be in a very good space. So that those 10 learnings are miracles. They do happen. They do exist. We can't just dismiss the fact that miracles doesn't happen. But one should not wait for miracles to happen, and create your own heaven. Arrogance, it's a recipe for death. You need to be very humble and open to the ideas and accepting thoughts and processes from other people. Rituals, rituals are not the end all and the be all. They are important in life, but they should not be the end of life. There are other factors which are more important. We need to find those factors and then keep them dear to ourselves. Number 4 are dues. And these are not the financial dues. Although I'm a banker, so financial dues makes an obvious a need here, but it's the emotional dues. So what we owe to each other, what I owe to Nauraiz, what I owe to my mother, my brother, my friends, this is what is important,
mm,
and those dues have to be, you have to be current on those dues. Never fall behind on those dues, because the life may
mm,
not allow you to then, pay back those dues. Number 5 is willpower. Willpower is everything. You can actually come out of ashes if you have the willpower. So you may be a bit hampered because of your health reasons or otherwise, but that willpower will make sure that you will be able to overcome that and take it on from there. Bold steps in life are very important. And in our context today, by the way, all these things are low-hanging fruit, but bold steps are required to address them. Goodness. Goodness is something which is there in people. It's for us to figure them out. At times, we are very harsh with people and do not bother to identify those goodness in those people. If we start as human beings, individual level, start identifying that positives in other people, I think we will be in a better society. We'll be a better society than what we are right now. Sincerity. We have to be sincere with each other. So whatever I am telling you, Nauraiz, I have to believe in this. If I am not sincere with myself, and I'm not sincere with people who are dependent on me for the advice, I think I will doing a big, I will be, I'll be culprit of in many ways than one, in terms of misguiding people and misguiding myself too. Communication, what we're engaged in today, very, very important. Talk to people, engage with them, share your thoughts, listen to their thoughts. In the discussion today, Nauraiz, the statistics that you have quoted are something which are very valuable for me. They are real treasures. So thank you very much for that. And I really think that is very important. And last but not the least is the legacy. So let us all decide on what legacy we want to leave behind, because that legacy will keep you alive, not your position, not the money, but that legacy and the impact that you will leave on the people. So these are my 10 learnings. Hopefully when the book will come out, we'll have another session. I will approach you and say, Nauraiz, I want to do a session with you.
To be honest, these are very beautiful. They're all are very beautiful, and more so, I think when you told me about the name Least Breath, I found it very refreshing and I think very meaningful, given that if all of us pursue our lives believing that we are on least breath, I am sure that we would be able to do much more and much more goodness as well, and leave much more goodness in the world, knowing that every minute, every second counts, and we want to leave a good imprint. No one wants to leave a bad image when they are, and being not taking anything for granted and being grateful of what we have. So I think it's the learnings are beautiful, but so is the name of your book.
Thank you.
And on that note, thank you so much again, Zafar Saab. It was absolutely very wonderful speaking with you. And inshallah, we'll speak to you again soon once your book is out.
Looking forward, really.